Can you tell us about the fabulous four situations on Forex pairs? All right, because it rarely has gaps. It's a 24-hour market. Thank you. God bless you. If you're not familiar with my fabulous four concept, you need to find that on my YouTube channel and listen to that 2 or 3 or 4 times. Very powerful concept that helps you play position correctly in the market. Or a lot of traders do not understand that the position of your trade is just as important as the trade itself. The same way in the real estate market, that the position or the location of your house has a big impact on the value of your house. You can have an incredible mansion in the ghetto in a very undesirable area, and the value of that mansion will be a lot lower than if you put that mansion in a very highly desirable area, and the values would be drastically different. Same house, same materials, same square footage, same beauty, different locations, different value. Same thing in the market. Same beautiful pattern to play, same power, same velocity, same momentum, but in one location, it'll run further. In another location, it will run into trouble faster. All right. So you have to know how to play location or position. And we use a concept that I came up with called the Fabulous Four to help traders understand where to play, what positions are the best to play. Now, what Patron is asking is, well, Oliver, there's no end of the market and the start of the next market in the Forex. And so how can I formulate the Fabulous Four? It's a little different in the Forex market. And there are two ways. You can consider the London Open as the Forex market's open. So London opens whatever time in your time frame London starts trading. That's the open. That's one way to do it. And you start from there. You grab your 4 items and draw a box around your 4 items starting from the London Open. That's option number 1. Option number 2 is to consider that every time your Forex pair goes flat, meaning that there's no trend up, there's no trend down, the actual pair is now just trading flat. And in addition to this, the pair, the pricing being flat, it's narrow, it's thin, it's thin, and the 20-period moving average of your item has gone flat. So much so that the Forex pair and the 20 look like they're one thing. No separation. That's a brand new open. You start there. And so whichever side your market moves out of that thin sideways, like the pair is laying on its back, the 20 is equally flat as well. If you power out of that, that's to the upside. If you power down from that, your move is to the downside. And every flat period, it's like it starts a brand new cycle, a brand new birth for your Forex pair. And so you can choose either one of those. I kind of like that flat theory. All right. Every flat period starts a brand new day. Every flat 200 and every flat price starts a brand new cycle. Now play out to the upside or out to the downside. You don't choose, you let the market choose. Why don't you trade US indices like the NASDAQ or the Dow Jones? All right, I get this question quite regularly, guys. And I'll try to be brief because I have done deep dives into this, why I prefer individual stocks over trading the indices themselves. Now, if you tell me from an investment point of view, I actually do encourage most people to play indices. Right? So it's very different. A distinction I want to make here. It's in short-term oriented trading. The main reason, guys, I don't like trading indices is because I rely on the psychological components of trading. I rely on the psychology behind a market's moves. And so for me, I'm playing not a stock, I'm playing the fear and greed cycles from traders, from players. I'm playing the participants of that stock. I'm not playing the stock itself. And I'm reading, when are the vast majority of the participants in this stock feeling fear? I can look at the chart and tell when the majority of the participants are experiencing fear and are running for the hills. I can look at a chart and show you that. I can show you when the majority of the participants are actually experiencing more greed in what some of the crypto players call FOMO, and they're stumbling across themselves to get in. I can show you what that looks like on the chart. I can also show you where what the transitions look like. So first it's greed, 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 and boom, something happens to switch it from greed to fear, and now fear takes off and runs its path to the downside. But that transition, that movement from greed to fear looks like something. It looks the same almost every single time. And if you know how to identify that baton pass, you can play the transitions masterfully. And that's where some of your biggest money comes. When does fear stop and greed begin again? When does greed stop and fear takes over again? If you can find those two moments in the market, wow, you're going to be a master. Well, the indices don't work that way. You see, what's moving in index is not the players. What's moving in index is it's the collection of all the items that make up the index. And so, let me give you an example. If the S&P 100 index, 100 stocks, the S&P 100, if every stock in the S&P 100 was going up, it would mean that the index would have to go up. But what if every player was shorting the S&P index? If every player is shorting the index, would it go down because of what the players are doing? Or would it still go up because all the stocks that make up the index are going up? It would still have to go up. So it has nothing to do with what the players are doing. I can't play the players. I can't play their greed. I can't play their fear, because the movement of the index is more determined by a basket of other things that has nothing to do with what the majority of the participants are doing with this index. And so I lose that advantage. That's a big part of my trading advantage. You understand? Now, I don't know if that makes sense to you. I hope it does. But that's why I lean toward trading short-term oriented. I trade individual stocks because I can find that moment where there's a switch from fear to greed. And I can show you one. Let me show you one today. Let's take a look. There's this move in Apple here. That's greed. I can see it. I can see it in the power of the green bars. I can see it in the smallness of the red and the power and solidity of the green bars, and how there's a wide space between where the green bar starts and where the green bar finishes. Now, look at what happens here. Look at this, guys. Look at how you go from green, wide. You see the wideness of that green? And you go wide, but less wide. See, this one is less wide than the first one. 1, 2. This one's wide as well. But now we go smaller. Now we got a smaller green. So we go from wide, a little less wide, wide, to smaller green, wide, to now little red, to now sizable red for the first time in the entire run. The baton has been passed from green, greed, to fear right there. That baton pass foretells a sizable collapse, especially given the fact that you have what I call the double space position. Remember, I told you position is key to knowing what to do. Look at the position of Apple. Look at how far this is from its next important item, the 20, and how far the 20 is from its next important item, the 200. I call this the dual space position, space 1, space 2. And when you have this dual position height and a negative event, fear starts. All right. Now, greed starts right here because this red bar was this bar was completely red at one point. You take a look at this, right? Let's take a look at this. This was a solid red bar when it was trading at the low. So look at how the bars grew in size, power, a brief red there, then a really powerful red, then another powerful red, and for the first time, a red started to disappear itself. The bull started to eat through the redness. So this red went. It didn't do that here. It didn't do that here. It didn't do that here, but it did that right there. It went right back up. Now, boom, that's the start of greed again. And boom, that's the start of fear again. And remember when I told you location? This location is the dual space location. This location is the almighty 200 period moving average. And if you know how to find these baton passing moments, traders, all right? When you know and you're skillful at how to find these baton passing moments, fear, 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 past to greed, 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 past to fear again. If you can find those baton passing moments at the right locations, whoo, your game is intact. That's playing the markets intelligently. That's playing with a method. That's playing systematically. That's not just, oh, well, I think it should go up from here. I think so. You think? What is that? I think it's oversold. What is that? We don't want to think. We want to know based on a specific, carefully designed approach. That's how you play the game.